Good morning. Welcome to this Monday morning Bazaar. I have with me Mangalam and Nigel. Good morning from all of us. But of course, we're starting on a slightly somber note. The death count in Morbi touching 140 is extremely disturbing, extremely saddening. Many more are missing, so one hopes the death count doesn't go up even further. Our commiserations and condolences to everyone, to the near and dear of everyone who have lost their lives in Morbi. Nigel, I can tell you that 40 years ago, when I was in college, there was a huge Morbi flood disaster. So this rushes back. It was one of the biggest disasters of my, childhood. Heart goes out to people who are involved with it.
Absolutely, Lata. Prayers and support and condolences to all those, our brothers and sisters that have been impacted by this. And we just hope that the death count doesn't spike up from here on. Very, very, terrible news, actually, to say the least. Well, Lata, but, it's another day of trade. On Friday, we got a good handover from the Wall Street. How are you seeing setup, and also some couple of macro details as well did come out?
Yeah, we have to get back to business, and the business news is actually positive. The SGX Nifty itself is indicating that, and this is largely because the handover from US, excellent. Dow Jones likely to be the best performing, to see its best performance since Jan of 1976. Of course, we have one more day to go. At the moment, it is the best since May, but it could well be the best since January of 1976. And I think the macro carry forward is the inflation data. US Fed does not look at its CPI data. It looks at its PCE inflation, personal final consumption expenditure. That also indicates an inflation. That's the inflation number they take, and that has come in at 5. The core PCE inflation has come in at 5.1. The market was expecting 5.2. So for the stock markets, that is a big positive. It's a good reason why the Fed will stick to the dot plot of 50 basis points hike in December. We don't have to discuss November because that 75 is something which the market has completely discounted. But the fact that it could be, a 50 bips hike indicates that they are stepping off from their rhythm. It's been 75 basis for three FOMC meetings in a row, and the fact that they could step down to 50 is being taken very positively. Actually, if you look at the CME, it's a Fed watch tool. It looks at how the market is parsing through the Fed fund futures what the rate hikes are likely to be, and that one indicates as of Friday that there is an increase in the number of people who are even expecting a 25 basis rate hike in December. But the important point is the number of people expecting 75 basis hike has clearly been falling. And that is perhaps what the tailwind for the markets. But you tell me, Nigel, how is the trade? Before I come to you, Mangalam, I know you have important parameters to point out, but domestic parameters.
Well, if you look at the Nifty and the Dow, we have been, boasting about that we have been the big outperformers, right? 2022 has belonged to the Nifty in comparison to the Dow. And, that's up for you on the screen. But in the last 1 month and the last 1 week, well, we have been underperformers, actually. If you compare ourselves with Dow, last week we were up only around 1%. The Dow was up close to around 5%, and that's the last one month performance. Well, the bears, they're putting in a fight at around the 17,850. Last 4 sessions, when we do trade setup, well, we've been talking about this, and we are going to that level and seeing a bit of a U-turn. But today, the SGX Nifty is suggesting that we'll start above that resistance level that we've seen in the last few days. And just pull up the highs of the last few days. It's in that vicinity of around 17,750 and 17,850. Today, the start is going to be above that level, so you'll want to see some kind of follow-through buying. The move that we have seen from around 17,000 to around 17,700 has been led by institutional buying. Make no mistake about that. I look at the DI and the FI data, put it together, and they've been buying on an average close to around 900 crores, in the last 10 sessions or thereabouts, from October 14th to be precise. We're not counting the Maruti session because volumes are very, very low. And, some of the bulls will be thinking it was good to have some shorts in the system. Because if you get these gap ups, they'll be forced to get squeezed out. But if that was on their wish list, then on Friday, you got some shorts in the system. Close to 5,000 contracts were added on the short side. And on that low base, it's a 10% increase. If you look at that, now the short positioning has moved to around 43% odd. Shorts in the system are not such a bad thing. I keep making this point. In fact, it could be a bit of a blessing. The problem for me is they're writing calls as well, telling you that at higher levels, we could see some supply that's coming in. given that we have a big event, we have a 500-point range, 17,500 to around 18,000 odd. And the 17,800 to around 18,000 will be a bit of a congestion zone. Let's see whether that can be taken out, whether the bulls want to go into this big event, at higher levels. Because there has been writing being seen at, close to around 35, 40 lakh shares being added on both sides. 17,800, 17,900 and 18,000 call. On the downside as well, at around that 17,500, 17,600, as well as the 17,800 put, we have been seeing a fair bit of writing. Till the Nifty holds above the 50 DMA, all is well, and you'll expect the subtrend to move up. Some bit of a time-wise, consolidation will be taken as well. But today, the big cue, Lada, is that we're going to be starting off closer around that 18,000 odd mark, and we'll have to see whether or not those call writers start unwinding their position. That's what could take us higher as well. So that's straight setup.
No, that's most useful. Absolutely. Yeah, go ahead, Mangala. What do you
For me, I have the globe that I'm watching out for, because where the Nifty goes from here is extremely important to watch what the global events are. And that's what's going to take place, because we're done with most of the results, barring the 3 that are coming out today. So near-term domestic cues are very thin. We'll be watching out for global cues. And what is the global market telling you? The Dow is up 14.5 odd percent. It's the best month, like you pointed out, all the way since Jan 1976. I don't think 2 of the anchors here were born at that point as well. Perhaps 3, we don't know yet.
No, absolutely.
But,
I was around.
having said that, earlier it was NASDAQ which was leading the gains. But this time around, NASDAQ is underperforming. NASDAQ is up just around 5%. So that is something we'll have to monitor going forward. Why is that? Because, the NASDAQ will give you a reason to move only if the street believes that maybe the rate hikes by the Fed will slow down now, or the inflation has perhaps peaked out. What will we, have to watch out for that? Well, all eyes on the Fed meet outcome on November 2nd. And the next week, we have the US midterm elections as well. So those are a couple of factors I'll be watching out for. But we get a cue, or we get a peek into what, the world is thinking when you look at a couple of the macros. The US 10-year, that's stabilized around that 4% mark. So is that telling you that, maybe things are looking better? The second one is the dollar index, stabilizing around that 110 from higher levels earlier as well. So is that telling you that we perhaps have, stabilized and the things are better now than they were before? Well, if they are, then the SGX Nifty indicating that 18,000 start may perhaps sustain. And if that sustains, what happens is that the earlier resistance, the list that Nigel put out with regards to the earlier highs, that becomes an important support zone. And why is that crucial? Because just the same time last month, we were talking about 16,750 to 16,800 being a support zone. And then the support moves 1,000 points higher. If that happens, then I'll just watch out for 2 things. One, whether the mid-cap index outperforms, because this month the Nifty is up 5.5%, the mid-cap index is up just 3.1%. Even on Friday, the mid-caps underperform. Will the mid-cap index outperform from here? And secondly, will the IT index be the leader going forward? Because the Nifty Bank has done its bit, very close to its record high now as well, 8.5 odd percent. Is the Nifty IT, which was underperforming so far, has begun to catch up a little bit? Will that outperformance continue?
My sense, Mangalam and Nigel, is that the market will not take the call of above 18,000 or this outperformance before they see the FOMC statement of November 2nd.
That's correct.
So I think a seminal move will come more on November 3rd or maybe November 2nd in anticipation.
Right.
May not be this early because, the US Fed this last 1 year has surprised us many times. Normally, it was very good to go long into a FOMC meeting because the Fed put was behind you. In November of 2021, when the Fed pivoted, when Jerome Powell pivoted, it was a very big blow to the market. That's when we saw the market falling. Again, there was a pivot in March. Again, there was a pivot in September. The September dot plot was a bit out of the blue. The market hadn't expected. So I think people would go to the FOMC. They are expecting that the Fed will say we are stepping off 75 and we are going into 50. But I think they would like to see it. So maybe big calls will be taken on 2nd or 3rd of November.
The only fear, Lata, for me is the way the equity markets have gone. They're clearly, they're
discounted.
They're expecting the 75 basis points hike. If there's any commentary that comes with regard to the next hike, 75 plus 50 will be taken.
Yes.
But if they sound hawkish and they talk about 275, then that's going to be a bit of an issue. But we have a couple of days to get to that.
The market is not prepared for that eventuality.
The other thing that can actually do well for India, perhaps, is the way Chinese economy is. I mean, globally, we saw the Chinese October manufacturing PMI that came in at 49. The street was working with 50. Levels upwards of 50 indicate expansion. Lower than that is contraction. So while, on a global level, the Chinese economy not doing well, maybe trade negative. Is it positive for India? Are people looking at India, continuously looking at India because India is outperforming? That is something we'll be watching out for. And closer home, 3 important results from an economy standpoint. We have L&T, Bharti Airtel and Tata Steel. The commodity rally has been up for the last 1 year. What does Tata Steel have to say about that? Has that ended or not? Bharti Airtel will tell you about how consumption patterns are, and L&T, of course, will tell you how the capex cycle is. So, from an economy standpoint, these results will be more important than just the Nifty EPS standpoint.
Oh, absolutely. I take your point entirely. Though, actually, the handover in terms of results over the last 3 days has not been all that positive. I mean, we've got very good numbers from Dr. Reddy's and Tata Power. But there were a bunch of others. Bandhan was not the best of results. JSW Power was not the best. NTPC was kind of, in line or a little below expectations. So, the earnings season, if you're looking at the last 3 days, is not giving us a major tailwind. At the moment, the tailwind is more global. But as you say, the next 24 hours are crucial. Well, with that, Mangalam, can we get the equity call of the morning?
Let's go ahead. We have Chetan Seth of Nomura saying that as long as Chinese equities struggle and assuming global risk-on sentiment continues, we are likely to see greater reallocation in Asia towards India, despite stretched valuations. And that is something the Chinese data also indicated right now. Korea and possibly Indonesia in the coming week. He says that the main focus will be on what the Fed's November FOMC will do, where the Nomura US economics team does not expect any signs of a Fed pivot.
Okay. Well, the FOMC meet is important for the rupee, so let's get you a very important rupee call of the morning coming from B. Prasanna of ICICI Bank. Prasanna says the risk sentiment improved and dollar retreated from its peak on market chatter of a future slowdown in the pace of hikes. However, he adds Asian currencies were under pressure, led by the Chinese yuan on weak fundamentals, triggering central bank's intervention. He says the rupee, which is under pressure from current account deficit and persistent hedging flows, recovered from its low helped by improved risk sentiment and RBI intervention. Says the rupee may remain volatile due to FOMC and is expected to trade between 81.75 and 82.90 for the week.
On the bonds, B. Prasanna says global yields fell sharply during the week, expecting slower hikes by Fed post 75 basis points in the upcoming policy and some stability in the United Kingdom. He also says domestic yields have retraced as well, though remaining volatile. He expects the 10-year benchmark bond yield to trade in a range of 7.3 to 7.5 for the week.
All right, well, we have a lot of stock-specific action as well to track for you today, and we'll get to that in just a bit in our top 10 segment. We're looking at Maruti, Dr. Reddy's, Vedanta and Tata Power. They're stocks that could open up in the green on the back of positive news flow. And then we have NTPC, IOC, JSW Energy, MRPL, Blue Dart, as well as Intellect Design. They're stocks that could react a little bit negatively to the news flow that came in the last couple of days.
Okay, with that, let's parse the global environment a little more because it's an extremely important week with the FOMC meeting, November 1st and 2nd. We will be able to react only on November 3rd morning. Mark Matthew of Bank Julius Baer and Company joins us. Good morning, Mark. Thank you very much indeed for joining us. The market seems to be priced to perfection, expecting that the FOMC statement will indicate a step down to 50 basis. You think the market is in a fine spot, or is it being a bit too confident?
Oh, that's a good question. I mean, we have gone up 13%,
Yes.
what was the 12% from where we were in the middle of October. So clearly there's anticipation that the light's at the end of the tunnel. I think it's right. I think it's right to say that because the forward-looking inflation indicators are telling us that. The most important is property in the United States. Price of goods isn't the issue anymore. It's the price of services, particularly property. And the listing platforms for apartment rentals are showing quite a large leg down in the asking prices of rents in the month of October. So I think that the data will continue to show us that inflation peaked some time ago and is coming off. And if you look at the so-called Anglo-Saxon central banks, that's what the Europeans like to call them, the Bank of England, the Federal Reserve, the Bank of Canada, the Reserve Bank of Australia, Reserve Bank of New Zealand, they tend to act loosely in a group historically. And at the beginning of this month, we had the Reserve Bank of Australia sound a note of caution. They hiked by 50. The market was looking for 75. Last week, Bank of Canada was supposed to hike by 50. They did 25, also sounded a note of caution. And so I think that we can tell the wind is shifting to a more accommodative policy globally. And I think that'll include the Federal Reserve.
Hi, Mark. Morning. Mark, but what would be termed as this dovish or slowdown? Because 75 basis points we're going to get, in November. Do you think that if they could indicate that maybe we don't get 75 in December as well, what are you factoring in? And then we come to an end, and then we see a bit of a U-turn in 2023? Is that what you're factoring in?
Yes, I think, Nigel, that would be a perfectly logical assumption. The market will not be shocked if we get 75% in the November meeting, but it is looking for some discussion about deceleration in the rate trajectory, and it's doing that because three important Fed officials have sounded caution.
Yes.
They are the chairwoman, Lael Brainerd, the San Francisco president, Mary Daly, and the Chicago Fed president, Charles Evans, who, by the way, all three are Democrats, I might add, but that's beside the point. The thing is that I think they will want to have that discussion, and that should appear somehow in the notes or the statement. And the market will interpret that as 50 basis points or even possibly less in December, and the dot plot being revised down because we're also going to get the dot plot in December. And that, I think, will be enough to take us into a year-end rally.
Mm-hmm. Right, Mark, I take your point about, there being some light at the end of the tunnel, but for us, we have to be sure that that light is not that of an oncoming train, and that perhaps could be that of China. I'm looking at the Chinese economic data that is weaker than what the street was anticipating. And now the thesis is that so long as China remains weak, and the world is looking at emerging markets, India will remain to be a beneficiary, notwithstanding the valuations. Do you think there is merit to that? And how do you view the allocation vis-a-vis valuation for both India as well as China?
I 100% subscribe to that view, that what's happening in China is a tremendous blessing in disguise for India and for many other countries. Where I am here in Singapore, absolutely that's the case, in Southeast Asia. But India is a much larger market than these small Southeast Asian markets, and so it's the one that people will naturally look to first when they try to find alternatives from China, because China has been the story that's really kept all the other emerging markets off the radar screen of global fund managers for the last decade. So China is very cheap, there's no doubt about that, but I think it's also cheap for a reason, and India is expensive, and it's expensive for a reason. And just like you wouldn't have wanted to sell tech stocks 10 years ago because they looked expensive at the time, I wouldn't want to sell India today because it is higher than its peers.
Okay. Well, just a final question, Mark. What do you, it's a very near-term trader question, but I still want to ask you, do you think the market will pause and wait for the FOMC statement before it takes the plunge of going ahead and buying more?
Oh, I can't answer that. I'm sorry, lad. Total coin toss. I don't know, but look at the way the market reacted to Apple. So it's still got, if you can show it good stories, it will certainly reward those good stories.
Okay. All right, we leave it at that, Mark, and we will touch base with you when the FOMC statement is out. Thank you very much indeed for joining us and giving us, parsing the global environment for us. Just a word, Nigel, you were pointing out that we underperformed. If the tailwind is so much in favor of developed markets, I think the FOMC positive statement could also mean that we will continue our underperformance, because we did so well when the world was doing badly that it will be still positive, but we may not do as well as the developed markets, is my guess. But let's wait and see what that statement is. For the moment, it's a quick break, and then our entire team will join us to detail the top stocks that we should be watching today.
Welcome back. You're watching us here on Bazaar Morning Call. There is a strong opening that is indicated by the SGX Nifty. The Nifty likely to open above that 18,000 mark after a couple of months. Let's see whether that sustains or not. But for that to sustain, a lot of individual stocks have to do well. And that's exactly what our research team is standing by with. CNBC-TV18's list of top 10 stocks for the day. The biggest gainer on Friday was Maruti post the numbers. Thereafter, we had the conference call and a couple of brokerage notes as well. Sonal joins in with the key takeaways of that. Sonal.
Good morning. Well, yes, strong set of numbers, and the commentary also is quite bullish from the management. They went on to say that this time around, increase in realizations came in because of price hikes, and they have seen higher market share of Brezza sales and the new Alto as well. Their order book that has come in at 4,12,000 units at the end of September 2022, out of which 1,30,000 order book is from new launches Brezza and Grand Vitara. Order book also remains strong for other models like Ertiga and Baleno. They will also launch newer models in the SUV segment in coming quarters, and they are not seeing any slowdown in the demand, especially in the export markets. And they have guided for a capex of 7,000 crore rupees in FY23 itself. However, chip availability is still affecting production for the company. 35,000 units were affected in Q2 itself. They could see some commodities inching up in Q4, but Q3, according to them, could be stable. But on the back of this, a lot of brokerages, they have upped their target price. Citi says that Maruti is the top pick in their sector. They have increased the target price to 12,500. Jefferies has raised the target price to 12,000. UBS says strong SUV comeback will bring in better average selling price and profitability. Goldman Sachs says that yes, second quarter was a beat, and they are adding capacities in SUV, and that is something which will work well for the company.
Point taken, Sonia, and you've stood up very well for Sonia, which is why I called you Sonia. I just wanted to make a point that among the many things that Mr. R.C. Bhargava said is that the small car sales are beginning to decline, the entry level. And it's only the SUVs that are doing exceptionally well, and they're making that transition in Maruti, which is very good for Maruti because they've felt the pulse very correctly. But it's just as a macro indicator, that's not very positive, which means the number of people who are migrating from bikes to cars is not increasing. So that may be a bit of, proving this K-shaped recovery that we've been talking about. But anyway, at the moment, we are on in a good news spree, and that one came from the Dr. Reddy's results, isn't it, Ekta?
Absolutely, Lata. You know, highest ever sales, profit before tax, as well as EBITDA for the company. Revenue was up 9.4%. Street was estimating a flat quarter year-on-year. Margin 30.6%. Street was estimating 22%. Profit of 1,100 crores plus, which is versus estimates of around 787 crores. Now, what went right with Dr. Reddy's was because of the contribution of the blockbuster cancer drug Revlimid generic, which they launched in the month of September. So that US added around $344 million in terms of sales versus estimates of around $250 to around $270 million. So analysts estimate that Revlimid generic itself contributed around $100 to $120 million this quarter versus estimates of up to $40 million. So that's where the real beat came in from. Russia also was up around 85% Q-on-Q, so no complaints coming in. The base business ex of Revlimid was sluggish, so India was flat. Pharma services and active ingredients business was down 23%, and ex of Revlimid, the US growth is a concern according to analysts. Going forward, why do I expect the stock to probably be in the green today despite the base business performance being sluggish is because Revlimid generic is expected to be a contributor in the second half as well. It could for the full year contribute $150 to $160 million totally, and the management is confident about their medium-term EBITDA guidance, and it seems like the story of a longer-term, medium-term growth for Dr. Reddy's is intact despite maybe some hiccups ex of Revlimid in a couple of geographies.
Okay, all right, Dr. Reddy's as well. Thanks, Ekta, for that. Vivek, coming across to you, but NTPC not that great?
Well, that's right. You know, while optically the numbers, especially when you're talking about the revenues as well as EBITDA, were higher than the CNBC-TV18 poll. Now, what you're actually looking at is, given the fact that the realization was much higher on the back of higher mix of imported coal. However, the profitability was below estimates, and also given the fact that losses in the JV has actually gone ahead and impacted the consolidated profits. While looking at the numbers, you know, the conference call highlight, one of the key takeaways was the fact that the company has said that now they're looking to go ahead and monetize close to 10 to 20% stake as far as NTPC Green Energy Limited is concerned. NTPC Green Energy Limited is the holding company for all of the green energy initiatives of the company, and this is something that has kept the street quite enthused. Now, what is BofA Securities saying? You know, they've gone ahead and kept a buy. They're saying that it's been an earnings whiz. However, revenue as well as generation were up on a year-on-year basis. They're saying that the RE, or the renewable energy scale-up, is something that could go ahead and re-rate valuations given the fact that NTPC still trades on an attractive valuation.
Right, Vivek, thanks a lot for that. The other stock on our radar will be Indian Oil Corp. Sonal joins in now. Sonal, you've told us about the cars, tell us about the fuel.
For IOC this time around, the reported numbers, they will definitely look like a big beat. Revenues higher than estimates at 2.07 lakh crore rupees. Company actually reported an EBITDA profit of 1,960 crore rupees versus an estimate of loss, and losses were much lower than estimates, came in at 272 crore rupees. Now, two reasons for that. The first one is they have accounted for the LPG subsidy or the LPG grant that the government recently announced, and IOC got 10,800 crore rupees out of that, and that is something which is accounted for in the EBITDA as well. Exo which the company's EBITDA loss would have been 8,840 crore rupees. That's a huge number, still lower than what the street was working with. However, the company is surprised on the refining front. The reported GRMs came in at $18.50 per barrel versus poll of $2 to $3 per barrel. Core GRMs there as well. That means the company did not see any inventory loss despite crude prices coming down. But marketing continues to remain a big headache for all these companies. According to Jefferies, marketing losses on diesel is 10 rupees per litre. Petrol, however, is doing well for them, but diesel sees more consumption for these companies as well. They've cut their FY23 EBITDA by 50% because of the marketing losses that diesel continues to see. MOSL has also cut FY23 EPS estimates by 32% because of the weakness that was seen in second quarter for the company.
Okay, all right. Sonal, thanks a lot for that. Well, I'm going to tell you about Vedanta. Normally, it's not a big move on its results, so the numbers look pretty okay. And we have a bit of a tailwind because commodity prices, particularly zinc has moved up a little bit and aluminium as well has moved up a little bit. It's not because of demand, but because supply constraints. Let's run you through the numbers. The top line was a little bit better, but they reported a little bit higher volumes in a couple of segments. And also they had a forex gain, or a gain that they've got because of hedging. Risk management out there. The EBITDA number as well looked pretty good out there. But the segmental performance is something that we're looking at. So Zinc International, that's a smaller part of their business, but it did much better, even though zinc prices were under some pressure. So that's pretty good. The aluminium business was a little bit better as well. Remember, the street was expecting a washout closer on 550 crores, or it came in at around 750 crores. So that's as well pretty good news. The oil and gas segment looks better, but you need to adjust it for closer on 500 crores, which is a one-time adjustment. They accounted for the windfall taxation as a one-off. So that's why that looked better, but otherwise it was in line. So going with green on Vedanta, not a big mover normally on results, but we'll keep an eye out on that stock as well. But Vivek, coming back to you, busy weekend for you. JSW Energy and Tata Power, you're tracking both those two?
Well, that's right. So a lot of energy companies reported their results over the weekend. Tata Power, when you're talking about this numbers optically very strong, especially given the fact that most of the verticals, including the solar EPC business, is something that has tracked quite well, especially in terms of the order inflow. What aided the profitability, very sharp surge in profitability, was the fact that the company, which has a natural hedge, since it has mines as far as Indonesia is concerned, that came in and aided the profitability. Revenues were well above what the CNBC poll were, up 43% on a year-on-year basis. Margins too coming in at 12.6%, and net profit jumping up almost 85% on a year-on-year basis. Now, what brokerages are saying that given the fact that Indonesia continues to remain a key driver of its PAT, however, the solar EPC business backlog, which is up almost 65%, has also seen quite a bit of large orders coming in from SJVN and NHPC. One thing to watch out for, the Mundra tariff order continues to be under section level, so there is a cost pass-through, and this interim cost pass-through has been extended till December 2022. What is important to track is, when the final order does come in. Talking about JSW Energy, slightly muted quarter. Merchant sales this time around were something that were quite muted. However, what actually aided the company was the fact that Vijayanagar solar operations was something that is quite strong. EBITDA was down almost 4.3%. Profitability, however, on the back of higher income, went up almost 38%.
Thank you very much, Vivek, for all the hard work over the weekend. What's intriguing is that power companies, one would have thought would do well because DISCOM outstandings apparently have come down. But a bit surprising, therefore, that both JSW and NTPC have not come up to speed, so to speak. Tata Power, of course, for other reasons, has done exceptionally well because of the renewables as well. Okay, Surabhi, to you now. You have more stocks and news.
Today I'm tracking three stocks, MRPL, Blue Dart and Intellect Design. To start off with MRPL, the revenue declined sequentially, came in at 24,600 crores. There was an EBITDA loss of 2,000 crores versus an EBITDA profit of nearly 4,700 crores in the previous quarter. there was an impact of windfall taxes, which was 1,000 odd crores, and impact of domestic refinery transfer price at 1,163 crores. Next is Blue Dart. The company saw a revenue growth of 18%, and this was largely led by a mix of price hikes and increase in volumes. Higher operating costs, though, have impacted EBITDA, which declined 12% on a year-on-year basis, and the margins came in at 18% versus 24% same time last year. Few things that could help company in the near term is the festive season that has gone by, that will positively impact the company in the Q3, and also company has announced a price increase with effect from December of 2022. So the stock is likely to open in the red, but it may recover in the later part of the day. And lastly, Intellect Design, the numbers were weak on a year-on-year basis. Even though the company saw a revenue growth of 17%, the margins, that saw a steep fall. It came in at 16% versus 26% same time last year. The Q3 is expected to be better, led by better revenue recognition of the deals that were slipped from Q2. But for now, we can expect the stock to open in the red.
All right, Surabhi, thanks a lot for that. So that is a list of our top 10 stocks. In case you missed it, here's a recap. Stocks with positive news flow, we have Maruti, Dr. Reddy's, Vedanta, as well as Tata Power, while stocks with negative news flow are NTPC, IOC, JSW Energy, MRPL, Blue Dart, as well as Intellect Design.
Okay. Thanks for that, Mangalam. Let's now invite Manisha Gupta to tell us all the commodity markets action. Manisha, it looks like the bulls are having a field day over there as well.
Oh, well, yes, they are. But the only problem has been from the Chinese data, the non-manufacturing PMI falling for the first time in 5 months, and the Chinese manufacturing sector missing the market forecast, falling to 49.2, is what is leading to some bit of a profit taking that you are seeing in crude. Having said that, crude is headed for a first monthly gain since the month of May there. And the same is the case with copper price. There's some profit taking in most of the metal prices since the Chinese data. But for metals as well, October seems to be like a positive month. We've seen 3 constant weeks of gains coming in for many of these metal prices. Also, it is going to be all about the US Fed meeting tomorrow onwards, and that is what is keeping the markets choppy. But in agri space as well, I want to quickly point on the global wheat prices, which have now gained by 6% since Russia has withdrawn from the Black Sea export agreement. And the second news over the weekend came on sugar, where India has restricted sugar exports till October 2023 right now, and that is also going to be a sector to keep an eye on.
Okay, all right. Thanks a lot for that, Manisha. Well, on that note, though, we'll slip into a short break. When you come back, we'll get chatting with Prakash Diwan. We'll address a lot of those stocks that could react. Later on, we'll also be joined by Arun Jain, Chairman and Managing Director at Intellect Design Arena. They'll discuss the past quarter's numbers. Welcome back. SGX is suggesting we're going to see a big gap up and open around that 18,000 odd mark. Let's see whether or not it's the Nifty's day to turn 18. Well, the bulls will like that. But Prakash Diwan joins us to talk about a lot of stocks and a lot of results that came over the weekend. Morning, Prakash. Thanks so much for joining in. Prakash, I want to discuss about a lot of stocks. But first up, let's talk about Dr. Reddy's. Let's play out, what the management had to say post their numbers. Remember, they clocked the highest ever sales, profit and EBITDA. We caught up with the CEO, Eris Israeli, to discuss the past quarter's performance and outlook from here on.
The product meaningfully contributed to this growth. At the same time, we have other good products as well in the US. So we cannot share, as it's part of a volume limited settlement that we had with the innovator, we cannot share exact numbers, but we believe that this product, as well as the other product, will continue to contribute meaningfully also in the next coming quarters. I cannot share numbers, but it is a very good launch for us, and it's going to continue to be like that as well, as you said, in the next coming quarters. What we are saying all along, we believe that what we want to contribute long term is double-digit growth, 25% EBITDA, 25% ROC, no debt, and amazing upside. This continues to be the same, and from time to time, you see, This quarter, naturally, the parameters we were even above that. This is allowing us to invest more in R&D, more in the future, and when we will be with the better EBITDA, it will enable us to invest more into the future. So I will say that this quarter is very consistent with the quarters that came before, and with the timing of products. Sometimes we have more and sometimes we have less. But overall, we are very comfortable with the 25-25 that we are discussing for the last several years.
Okay, well, Prakash, just to continue with Nigel's question. Okay, first, good morning to you. Thank you very much indeed for joining us. You heard what Mr. Israeli had to say. Very confident of a 25% EBITDA growth and intending to invest that in the future. Is DRL got more legs to run?
Good morning, Lata. So I think it's very clear that finally that turnaround is happening in this big name. We've seen how it's kind of struggled. It's been flattish in most parameters all the way. But now Revlimid is something that's likely to kind of get them that confidence and that strength. And it will only organically keep on growing from here. So that 25% number is definitely very heartening to hear this. And my sense is, the stock will still give you an opportunity to buy into it for the simple reason a lot of people might still feel that the FCF, the free cash flows might still be under stress because they keep on investing all the incremental revenues from these new launches into the business. So the R&D spends are still significantly higher given the growth trajectory that they are in, and that's what's keeping a lid on the stock. But I think at 4,400 plus whereabouts, it's definitely something which you could bet for a turnaround for the next 2 years, and it will probably grow much faster than what you've not seen happen in the last 2 years. So yes, definitely a turning point, and the management after a long while has come back with this 25% metric so confidently.
Okay. Well, in that case, that's confident. What about Maruti? I mean, the stock has been really running up. It's a fairly decent performer over the year as well. Do you think, therefore, it's the extremely good performance is in the price or can still run?
So, Lata, Maruti is something which has consolidated. I'm talking about the price first, and then I'll talk about the business a bit. The stock has beautifully consolidated below this 9,000 mark, and without any negativity around it. It kind of kept on gradually growing from there to this 9,000 plus zones before the numbers. And, the other day we were talking, Sonia and I were talking about these numbers being so positive for the simple reason that realizations, cost pressures, all of that is favorable for them. They managed to mitigate the increase in raw material prices. Of course, it's helped that commodity prices have softened this quarter. The price hikes have been very slow, very gradual, but that's also kind of paid off. And what's working for them essentially is higher end, cars getting sold. And the moment you start selling 16 lakh, 18 lakh plus kind of cars, your margins definitely are much healthier. So the realization from the product mix is what's helping. And I think it's just the start of a great trend where they'll probably start getting into the SUV market in a much more significant way, and all the further investment incrementally will be in that zone. So whether it's product launches, whether it's variants launching, so all that will definitely work very well for them. So I think it's the start of a fairly secular trend, and then you can of course have some headwinds from the supply shortage on the chips getting waved off or getting cleared. So all of it looks like Maruti is probably going to make some new highs in the months to come.
As you were talking, there are a lot of brokerage views going in, and most of them are sitting at 12,000 in terms of a price target. Yeah. Good enough or too good to be true?
No, so as I said, it's conditional. I wouldn't be too optimistic till I see the supply side constraint getting removed. When you have a 4 lakh plus demand bookings for cars, but then if you can't supply that, it's just a number sitting there. So to be able to do that, they'll have to do something to ease the chip shortage particularly. That is something which they're working on in a very different way than some of the other OEMs. I can tell you that from what I've heard. From the vendors, from the suppliers of these chips globally. Okay. And if that works well, yes, 11,000 plus 12,000 could probably be within striking distance, at least in a year and a half or so.
Okay, all right. Prakash, request you to stay with us. We'll invite our first management on the show. Then Intellect Design Arena, they posted a weakish set of numbers. The profitability was down. There was a steep contraction in the margins as well to around 16%. Well, let's understand what went on in the past quarter and the way ahead from here on. Mr. Arun Jain, Chairman and Managing Director of the company, joins us. Hi, Mr. Jain. Morning. Thanks so much for joining in. Well, give us an outlook first on margins. You have been talking about 20% for FY23. At the half-year mark, you're okay, but the past quarter is a little bit worrying. So what's the outlook on margins, if you'd give us a sense? Was there any impact of Forex? That's why it's come down so much. And when do you hit that $75 million per quarter?
Yes, I think I'll answer you all the questions. So thank you for remembering all the numbers, what you are asking me.
It's our duty, sir. It's our duty. We like to give our viewers the best. Go ahead.
Yeah. So first of all, I always mention it's the last 12 months, which is important for a product company like us. So quarter-on-quarter numbers are not the right metrics to be looking at it. But for this quarter, specifically, if you are looking for the margin, there are two reasons. One is $6 million movement in the, one is $2.9 million on the way we move from our product business to a platform business, which is resulting into a not immediate booking, but we booked 4 orders and those orders translate into $2.9 million if it would have been like-to-like license revenue. And there are $3.1 million which has got shifted where we won the order, but contracting is not completed before 30th September. So if you put that in context, I think we are in the same number, around 125 crores of EBITDA would have been there if all of it would have been there.
Right. So
looking at the,
Go ahead,
sir.
Yeah, so looking at the numbers which are just 27% on year, our significant move which happened after December Technology Day was to platform, and the platform business was very, very healthy. We grew 62% on platform revenue in last 1 year, and that's a very significant shift for a product company when it becomes
Mr. Jain, Mr. Jain, we like a couple of numbers. So you're saying that you hold on to the margin guidance of around 20% for the year. Just want to confirm that.
Right.
And also, when do you hit $75 million per quarter? I think you were guiding for that, right?
Yeah, it should be in we are on the ballpark distance to $75 million.
In the next quarter? Quarter 3?
Next Q3 or Q4.
Okay.
Definitely Q4. Yeah.
all right.
So that's right.
Okay, we take that point, and the first half you've done what, 24% revenue growth. You had guided for 20%.
Yeah.
Just wanted to know if you want to up that guidance because some of the revenue spilled over into the third quarter, like you said. So is there likelihood of you doing better than 20% that you've guided for, given you've done better in the first half already?
Yeah, the market is not. I think we need to understand that inflation and the European market is making the decision slow down process, and as of now, there is uncertainty of the closure frequency. The pipeline is very healthy, $800 million pipeline is there. So, but closures taking longer time because of uncertainty in Russia-Ukraine war and high inflation rate. So these are two basically factors which is the headwinds in the. Besides the tailwinds, what we have, we launched 3 basically we call wide window movement in the company of technology company. Our AI business is driving us 3 platforms we could able to launch in 1 quarter, and each platform is competing like ESG. We won the deal on AI from one of the largest European banks. Is a landmark deal from the perspective of the people who are investing hundreds of millions of dollars in Silicon Valley, and we are winning against them. Is a very big wide window movement for us.
Mr. Jain, that point is taken. Actually, your deal pipeline looks very good. It's a 5.5% growth, and at 6,500, I think it's the highest we have seen. It's a new high for you. That point is taken.
Yeah.
But it looks like your costs are also growing. Your EBITDA is down. I mean, will this pressure continue?
Yeah, I think we guided in April, if you remember, the 3 T's are affecting our PAT margins. One is travel, which was not there last year, talent, and the tech. So now travel has got stabilized in these 2 quarters. So now there will not be incremental travel costs, but when you're looking from year-to-year comparison, there is a substantial increase in travel cost, which is impacting the margin, and tax cost 26% is significantly larger than 16% last year. So those are the two elements which are, and talent costs, all of us knows that every company has to go through a talent cost increase in IT.
Has it stabilized or it continues to be higher, talent cost?
I think it's stabilizing now, another 1 quarter maybe. So it's just a question of one or two more quarters. Industry is coming to the reasonable level now and rational level, I would say.
So the worst of attrition and, those pressures are behind is what you believe?
Yeah. It's definitely from July onwards, it started coming down, and with a lot of other companies not showing the same kind of a...
So can you give us an EBITDA guidance? Because, revenue is good. It's not translating into EBITDA at the level that the revenue is growing. Any EBITDA guidance at all?
Yeah, that's what we are looking at. For the whole year, we should be able to do 20% plus.
No, margins. I was looking at a whole number, if you have. Okay.
Okay. You want actual numbers or what is it?
Yes, actual number.
An actual number is difficult to
range. Okay.
Yeah. A range of 20% plus on EBITDA margins. That's what we are saying.
All right.
20% growth and 20% EBITDA margin.
Just a quick one from a long-term standpoint. How much do you think the platform business should contribute to your revenues? Because that is a higher gross margin business for you. Currently, it's about 22% in the second quarter.
Yeah. I think in a long run, 3 years perspective, we should be contributing almost 40% of our business should be platform business. It's a very healthy pipeline is there in that business. It takes longer time to book the revenue from there.
All right, take that point. Thanks a lot, Mr. Jain, for joining in. You are holding your 20% guidance for the margins and 20% plus revenue growth for this year, and 40% revenues coming in from the platform business in 3 years. We will hold you on to those numbers. Take a short break. On the other side, we'll get technical calls coming in. Mitesh Thakkar as well as...
Welcome back. It's time we gave you technical strategies for the day. Joining us now are Mitesh Thakkar and Sudarshan Sukhani. Gentlemen, good morning. Thank you very much indeed. Hope you have a great week ahead. Sudarshan, first to you. What's the index trade?
Good morning, Lata. See, the index trade is relatively easy. Last week, it was the same trade. The idea is to be long in the Nifty and in the Bank Nifty and just stay long. This is a positional traders market. I've explained this last week also, even though it was truncated. The point is that you cannot intraday trade in a market which is giving us large gaps. You understand the trend. The trend is up. The gaps are all on the upside. Closings are all on the upside. So you take a position and stay with it till the market tells us enough is enough. And the market hasn't told us that. So if you don't have a position, look for these small intraday dips, intraday consolidations, and go long there and stick with it.
Fair point.
Right.
Mitesh, same question to you. Good morning. Index trades?
Good morning, Lata. I think, I agree with what Sudarshan said. I think trading on the long side is definitely, the way to go ahead. The levels which I would watch on the upside, around 18,060, 50, 70 odd zone. If you connect all the weekly highs for the last 1.25 years, I think there's a trend line at about 18,050, 60 zone. So I think that should be the target area. And once we cross that, then I think traders should prepare themselves for a new high. So I think in that sense, positive setup. But with today's gap up opening, I think you should see some kind of supply emerge around the 18,050 mark. And in case we start getting past that, if not today, maybe tomorrow or day after, then I think it'll be a market which could possibly gain strong momentum on the upside and would suggest a retest of 18,500, 600 levels at least to begin with, and then maybe even higher.
Big call coming in. If we grow past that 18,550 mark, perhaps the stage is set for a new high on the Nifty. Individual stocks, Mitesh?
Yeah. So I have all long calls today. The first one is a buy on Gas Authority with the stop at 88.5 for targets of 94.75. Apollo Hospital was a buy earlier as well. Even now is a buy. Keep a stop at 45.20 for targets of 46.70. A buy on Cummins with a stop at 12.70 for targets of 13.50, and a buy on Bosch as well with a stop at 15.950 for targets of 16.550.
Okay, got that. Sudarshan, your stocks?
Well, HDFC is my first buying idea. HDFC is finally getting its act together. It does appear that the stock could outperform in the near future. So consider buying HDFC with a stop under 23.50. Lata, all the trades are positional trades. This is, as I've explained earlier also, this is not a day trader, intraday traders market. There will be a market like that, but not this one. Then ONGC is another buying idea. ONGC is almost confirming a bullish head and shoulder. That's a decent upbeat pattern. Buy that, hold on to the stock, keep an initial stop under 131. Just to keep my own enthusiasm a little tempered, Z is an intraday short. Z's decline has been almost consistent for the last 15 days. It's a short with a stop on above 268, and Reliance is my final buying idea. Reliance had a very good day 2 days ago, and it does appear that the sharp correction in Reliance is now getting over. So Reliance, HDFC, State Bank could now add to the index and do what the banks were doing. So buy Reliance to stop under 24.50.
All right, take that point. Reliance is a buy at with a stop at 24.50. Take a short break, come back, we'll get you the pre-opening rates, and also with us will be Harshit Kapadia of Elara